Hello, everyone, and welcome. My name is John Harkins. I'm the Events Associate for the French American Chamber of Commerce in New York chapter, and we are happy to welcome you to our webinar today, Cash Flow, Loan Forgiveness, and Other COVID-19 Tax Relief Assistance, Part 2. Just a very quick word about our organization. The French American Chamber of Commerce's mission is to provide the opportunities, experiences, and understanding that empower successful business relationships between and for members. The FACC New York chapter counts a mosaic of 1,000 members, representing sectors from tech to food, finance, and other professional services. These members have complimentary access to digital events featuring top industry experts and leaders, as well as personalized member-to-member introductions, access to the FACC member directory, and of course, we'll be able to connect with other member attendees of this webinar. This webinar itself will last about 45 minutes or so. I encourage everyone, if you have any questions, send them in using the questions section. We will do our best to answer each one towards the end. And of course, this webinar will be recorded and the slides will be available to all attendees, so don't worry about missing a thing. Just a very quick word about our speakers today. Our speakers are Benjamin Tolub and Armin Gray, founders of Gray Tolub. Gray Tolub specializes in domestic and international taxation, real estate, corporate, immigration, and trust, and estate matters with clients ranging from high net individuals, family offices, and multinational corporations. Just like part one, we have a lot to get through in part two, so I won't keep us waiting any longer. Benjamin and Armin, would you like to take it away?
Sure. Thanks for that introduction. It's fantastic. If we can just skip to the next slide. One more. So yeah, today's agenda, so there's only 45 minutes, so we're very wary of the time. I'm just going to close the window. Sorry, it's a little loud. I was wondering where that was coming from. Sorry about that. So yeah, we're just going to go through the provisions that, one, we're going to do an update of last month's presentation on the PPP. There's a little bit to update. Then we're just going to go generally into the tax provisions. You're probably already generally aware, but we just want to spend a couple of minutes on each provision just to remind you, if you're a professional, you should also remind your clients. If you're a business, you may not be utilizing these things, and it's something to think about because we have polled our own clients and we have read polls. There's a lot of people not taking advantage of these, and some are just completely unaware, but even if they're unaware, they feel it's too complicated. So we just want to, give a very general overview of how much money is involved and how it can help your business if and to the extent you want to utilize these provisions. So why don't we move to the next slide, which is an update on the PPP program. So the deadline for applying for loans was June 30th. They extended it to August 8th, 2020, because there was over 100 billion unused funds. One frequent question we still get are lenders still, taking applications? The short answer is yes. I had one client get it from actually American Express, which I was surprised last month. I just ran a search because the SBA obviously shut it down and now it's back up. They're taking applications as of July 6th. And I just ran a search to see if and to the extent, where banks might be accepted. So there's an interesting website we found yesterday, getfundbox.com. They're actually advertising on Google, but you can also check with other banks. Or also, I understand the SBA website, has the list of providers. So if you haven't got the funds, or if you didn't apply, or you're worried about applying, you should seriously consider applying for these funds. We'll explain why. If you have any fear, we're going to get to that to lower your concerns. Obviously, there's been a lot of updates and a lot of confusion around the program, and a lot of uncertainty of, will I be audited? Will something bad? What if I really, really don't need it? If my business isn't going out of business, etc. That wasn't really the intent of the program. Just as a side note, we're going to try to make it a little more comfortable in a couple of slides. But you should definitely consider getting it because it's basically a tax grant whereby it's not free money. People's taxes, the money is borrowing from future generations to basically stimulate the economy through the coronavirus crisis. And if you don't utilize it and you intend to remain in business, you're going to be paying it back one way or another. So I don't really view this as a handout or anything like that. If you're thinking to continue to work, because you're going to have to pay it back through future tax increases. I think the national budget deficit this year might be $5 trillion, maybe larger if they pass another relief bill. That's a lot of money they're borrowing. So again, it just has to be paid back in the future one way or the other. And the only way is either you cut services or increase taxes. So again, you should really think about that. Let's go to the next slide. So how can we make you a little more comfortable if you haven't got it? So the SBA disclosed the names of recipients who got amounts over $150,000. Some notable recipients are in the news. I'm sure you read it, but Nobu's franchises, again, you're going to see a $27.7 million. That's a really large number, but that's for multiple franchises. There are different LLC. Each one's treated as essentially a separate business for this purpose. But when you aggregate it, someone aggregated it, and it was $27.7 million. Now, Robert De Niro is a very wealthy person. He's an investor in these franchises, a co-owner. So again, he's accessed the funds derivatively through his companies to pay his employees, etc. Kanye West is another Yeezy, $2 to $5 million grant. I'm sure you read in the news because he says he wants to be president now. But again, he's a billionaire, and his company, which I understand is 100% owned, he got $2 to $5 million. Again, we're not judging anyone who's getting money. I don't want to make it political or anything. I'm just saying these are the people who, through their legal advisors, determined that they're eligible and applied and got a grant from the SBA. Many politicians, friends, and family members, as being reported in the press, got millions of dollars. If you want to do something fun, you want to run a search. If you're still scared about taking the funds because it's not absolutely necessary, there's a website that actually you can put your zip code in. So if we go to the next slide. So we just ran our business zip code, and it looks like 434 loans came up, and you can see the dollar amounts: 5 to 10 million, 5 to 10 million. Hughes, Hubbard and Reed, which is a large law firm, is 5 to 10 million. Again, their argument is they may have laid off their people, maybe not all of them, but 25%. And that's the whole design of the program, is to avoid those kinds of layoffs, and because you have to use it for payroll purposes predominantly. It used to be 75, but it's down to 60%. So there is some leniency with the PPP Flexibility Act. But again, we just wanted to get you comfortable because we had a lot of clients and a lot of people we talked to who didn't take them. And I'll give you an example. My dentist, their CPA advised not to take it, even though they were shut down for 3 months, could not do business, only emergencies, really hurting for the 3 months, but they were using personal funds. And I told my dentist, you should really seriously double check this. And they went and actually got the funding. So again, you don't have to be a gigantic company. You can be a smaller company. If you're a small business, or even if you're a bigger business that's not publicly traded, the money's still there. You should absolutely consider it. Double check if you haven't received the funds. Can we go to the next slide? So just a little more updates on the last program. So again, the PPP Flexibility Act passed. It had a certain amount of modifications. The SBA has updated their interim rule, the loan forgiveness app. They also have an easy form. You should seriously consider looking at the easy form if it applies to you. It really simplifies things. It's not applicable to everyone, but if and to the extent you're eligible for the easy form, you should go look at it. It's really easy. If you haven't applied for it because you're worried about the loan forgiveness, all that, you can now look at the guidance is out there. It looks like it's pretty certain, even though there's so many changes. At this point, it seems fairly much more certain than it was, and you can review all this. If you've already got the loan and you're probably worrying about loan forgiveness, check with your bank. Your bank is going to determine whether or not it's forgiven. Chase and a couple other banks are already sending out, client alerts, etc. So check with your bank, see if you're eligible for the easy form. So that's all we have to really say about the PPP program because we're limited on time. So we're gonna go to the next slide. Benjamin, do you want to add anything on that?
No, not especially. So we went in far more details on June 4th during the part 1. And definitely the PPP loan is a great perk. And if taxpayers meet certain requirements, So as everybody knows, it's a loan that is going to be forgiven. So definitely it's a great perk to retain, especially to retain employees and pay salaries, as well as up to 60% and 40% for other expenses like rents and electricity, etc. And no, so that's great. And so in addition now to the PPP loan, and we will focus here on part 2. So we are going to discuss tax provisions. So there are 2 main bills that has been signed by Trump after they passed Congress and Senate, so 3 pieces of legislation actually to assist in the COVID-19 downturn, including the first one was the Families First Coronavirus Response Acts, signed by President Trump on March 18, 2020. The second one was the CARES Act, that stands for Coronavirus Aid, Relief and Economic Security Act. It was signed by Donald Trump on March 27, 2020. And since then, there are like a lot of regulations that were drafted and issued to understand how these rules should be applied. So the legislation is really designed to bring certain economic and fiscal relief to businesses and individuals facing financial difficulties due to the crisis we are living. We've been living for months right now. In particular, there are several significant business tax provisions intended to improve the cash flow and liquidity, and we will go through them in more details. So apparently, there are many people that are still not aware of these tax provisions, so it's important to be aware of them. Maybe it's also important to take more time not to file final tax return by July 15, but maybe take a little bit more time to file, final tax returns, both individuals and corporate tax returns, and avoid amending returns in the future if you missed using some of the tax provisions. So as I mentioned, we'll provide a summary of this tax provision along the presentation and how it may assist you guys in terms of cash flow management. And there are some provision. They are really, really great. And maybe you want to, next slide, John, and maybe you want to talk about the first bill, Armin?
Yeah, sure. Just a disclaimer on just to add what Benjamin said. This presentation is not supposed to be detailed, and it's certainly not legal or tax advice. It's really just to show you the provisions, attach a dollar value, and just make you aware. And you might be generally aware, but maybe you're not taking the benefit because it's too complicated. Our advice is to talk to your CPA and see if it's beneficial to you, because some of them are just interest-free loans and some of it just is pure dollar credit for you. Obviously, this is not legal advice. You cannot, or tax advice, you can't rely on it. That's why we're saying we just want to highlight these provisions based on our internal polling and external polling that we read in the news, tax reporters, etc. I'd say 40% to 50% either are unaware, and more than 50% are likely not taking it. So again, we just want to highlight some of the things you should discuss with your CPA. In terms of the first package of coronavirus relief, they did provide, part of each package is they're going to find funding to hospitals, etc., testing and all that, but that's not what we're discussing here. We're talking about how can we help your business, or how the tax code help your business. So one of the provisions in the first piece of legislation, or one of the first pieces of legislation they provided, was essentially if someone got sick because of the coronavirus, and let's keep it real simple example. The government says for 14 days you cannot work and you have to be locked up in your house for 10 days, whatever the number they determined. One, does the employer have to pay the salary of that worker because that person can't work? And B, why should this be on the burden of a small business? So again, that's the larger context, just so you understand this. So what they've done is they said, if you're forced to essentially one of your employees has to be quarantined or can't work because they got sick, or if they have to take care of someone else, because again, if you're in the same household and one person gets sick, so you might have to take care of them and you might still have to quarantine. But in any event, if you're affected, they want the employer to pay the salary if you're one of the required employers, which is essentially small and mid-sized businesses. So you have to pay your employee, and on top of that, though, they're going to give you, the government's going to give you a tax credit, which is the cost of that. If we can go to the next slide. So this, again, we don't want to cover it because I can already see we're going to run out of time. So this is, you can read this later. There's a huge FAQ, it's hundreds of pages. We just slice and dice some questions, but it basically walks you through this. So who's the type of employer we're looking at, how much. Can we go to the next slide, just to speed it up? Again, more, you can read this on your own, but it's just telling you what is generally intended, which I already summarized. If someone gets sick or you're taking care of someone, they're going to give you money. That's what you should take out of this. And most people, my guess, is not taking this benefit, even though they may have provided sick leave to their employees. Can we go to the next slide? So again, it's generally, I want you to focus on the numbers. So if you're an affected individual, it's $511 per day up to, and $5,110 in the aggregate based on the IRS website we looked at. If you're caring for someone else, they lowered it, but still, it's a lot of money. So $5,000 is not it's not chump change. They're essentially providing sick leave if you're coronavirus affected, etc. What is the documentation?
So can you explain? Sorry, I mean, can you explain again what these amounts correspond to? So what they are? They are really grants actually from.
The government is going to pay the sick leave if it's coronavirus related. That's as simple as I can say it. Obviously, when you get to the technicalities, it's going to get much more complicated because, for example, what documentation do you need to provide to prove it's coronavirus related, etc. But the short answer is, if the government is forcing you to quarantine, or someone gets sick and you're asking them to quarantine so it doesn't affect your business, your other employees, they want you to pay the employee for the sick leave, but the government is going to reimburse you through a tax credit. That's the short answer. So again, it's free money essentially, because I'm guessing a lot of people already provide sick leave. So you should double check if you're eligible for this. I think that's enough because we're going to run out of time. Let's skip to the CARES Act. Can we go to the next slide? Okay, that's a simple example, by the way. You can read on your own, but it shows you the money. So if you see how it works, so they're giving you essentially in that example $4,000. Can we go to the next slide? Do you want to talk about the intro, Benjamin?
Yeah, sure. And then we will discuss in more details, the main provisions. But so the CARES Act is really turning towards tax provisions. Definitely. So there are topics like, employing retention credit, payroll tax deferral. We will detail the net operating loss carryback. That is really a huge perk from a tax point of view. There is an increase of, so actually a relaxation of the limitation of interest deduction. So interest deduction relief that applies to larger companies. There is acceleration of the refund of the A&T tax credits. And there are like a bunch of individual tax provision that we will go through. As you know, as everybody knows now, there is a return extension deadline to July 15, 2020, so very soon. There are some sole, so state and local tax issues that we will discuss, and as well as international issues. And maybe, Armin, you can start with the loan forgiveness.
Okay, next slide. So very quickly, number one, cancellation of indebtedness. So that loan forgiveness is not taxable. That's the good news. The bad news is any money you spent on an employee salary or business expenses, you're not going to get a deduction. There's a debate in Congress for a long time with bipartisan support to give you that benefit. It wasn't passed in the PPP Flexibility Act. We're hoping In the futures, it's passed because it's a huge negative in terms of the PPP funding. And I think it was congressional intent actually for them to give the deduction, but the IRS has interpreted actually differently based on existing statutory guidance and interpretation. But
yeah, and actually this is very typical, by the way, in the tax laws. Very often when you have some income that would be exempt, the related expenses are not deductible. But here, actually, if the expenses would be deductible, it would be like a huge double dip and an additional perk. So we will see what's going on with
that. Next slide. Okay, I just want to give a plug to the FACC. I believe, Benjamin, I believe that you have already done a presentation on this perk. We're just highlighting that it's available, and you should, if you haven't considered it, maybe you didn't watch the other presentation, you should certainly go and watch the other presentation. But in general, if you don't get PPP funding, you're entitled to essentially $5,000 per employee, up to $5,000 of cash back. And it's a huge perk. It's really intended for larger companies, but again, some people didn't take the PPP funding. So talk to your CPA and watch the other FACC presentation. So can we go to the next slide? Next, yeah. I don't want to run out of time because I know you already discussed that one, John. Payroll tax deferral. I think you may have also covered parts of this in other presentations. So just very generally, because this one's a little more complicated, we're gonna go over it. But again, I highly encourage you to go to the FACC's website and look at the other presentations and reach out to John if you can't find it. But I believe there might be another presentation on this. But very generally, they have essentially provided an interest-free loan for 2 years of the employer's share of the payroll tax, which is 6.2%. So if you pay someone $100,000, there's employee Social Security tax, and there's an employer, and it's 6.2% each. So the employer side, they say you can defer it and pay it back over 2 years. And a simple example is that, let's say you had 10 million of payroll tax liability. Again, that has to be a huge company, but I want to give you context of numbers. If it's 10 million times 6.2%, you're talking about 620,000, right? If it's a million, you're talking about 62,000. That's an interest-free loan, and even if you don't need it, it's available, and you can collect interest in a bank account. The only complication is you'll have to coordinate with your payroll provider, ADP, Paychex, Gusto, whoever you use, and it's very complicated in terms of adjusting and making sure the numbers work. So there is a compliance cost to this. I think it would have been a lot easier if the government just lent you an interest-free loan, but for whatever reason, they do it through the tax code, which causes complications. But again, it's not chump change. The only other comment I want to make about the payroll tax deferral is there's a trust fund penalty. So if you don't pay it back, there's always potential penalties and additional taxes, etc. So if you're a struggling business, one of the comments you may get, or your decision-making process, well, I'm gonna have to pay it back anyways, and I don't know if I can calculate this correctly, and what if I use the funds and I don't have the funds, what will happen to me? To the best of my understanding, you will not be personally liable for this portion, but you have to be extremely careful because the total amount of withholding for the employee tax, that's 6.2, but also the income tax, you still have to send that over. So you really have to coordinate with ADP, Paychex, your CPA to make sure the calculations are precise and clean, because the other portions you can be personally liable. So I would not say dip into the tax liability and use that to pay expenses and declare bankruptcy, worst case happen, because you can be on the hook personally if you're responsible for these things for that other portion. This small amount, 6.2%, I don't believe you're on the hook based on the guidance I have read. But you have to be really careful and coordinate with your CPA. Benjamin, do you have any comments on that? Well, I think we should just skip because we're going to run out of time, but I just want to, I'm talking too much. So I want to see if you want to chime in a little bit on this portion.
Oh, you're pretty good. You're pretty good. No, I think next slide, please, the NOL carryback.
Yeah, so let's go to NOL, and Benjamin, why don't you talk about this one?
Yeah, sure. So that's really a great perk because right now there is a limitation of using of NOL carry forward and clearly a limitation of NOL carryback. So there are some new special rules for the year, for any NOL in the year 2018, 2019, and or to 2020. They will be able to, these net operating losses incurred by company will be, or businesses will be able to offset income without there is a current 80% taxable income limitation that was applicable since the latest Trump tax reform of 2017, starting in 2018. And NOLs will also be able to offset prior years, so NOL carryback for 5 preceding years. And we will see later some example. So the new temporary NOL rules apply as well. It's good to know to flow through entities like partnership and sole proprietor by modifying the loss limitation for non-corporate taxpayer, so they can deduct excess business losses arising in 2018, 2019, and 2020. John, next slides. Thanks. And so this first example is really a very, very simple example regarding the carryback of the NOL. So for example, if you have the NOL net operating loss for the year 2018, you will be able to carry back this loss to the prior 5 years. So here, 1, 2, 3, 4, 5, 2017, 16, 15, 14, and 13. Same for 2019 up to the year 2014 and 2020 up to 2015. So clearly, we can assume that the big losses due to the COVID-19 crisis will arise in 2020. Next slide. So these are example of figures. So you can see the number in bold. So you have a total of $1,200,000 of taxable income. The tax paid was $532,000. You have an NOL, total NOL of $800,000 in 2020. So you can see you can carry back this loss of $800,000. So you can see 2020, $8,000 entre parentheses back to 2015. So in 2015, there was $100,000 of taxable income. So you carry back $100,000 of NOL. And that's great because in 2015, the corporate income tax federal was 35%. So you're using actually corporate income tax at 21% of losses in 2020 to get rid of $35,000 of tax paid in 2015. You are using $200,000 of NOL in 2016, and you get rid of $70,000 of corporate income tax. And in our example, $500,000 in 2017, and you are canceling $175,000 of tax that was paid in 2017. So can you explain, Armin, how does it work in practice to get these refunds?
So most businesses, I'm glad you brought that up. You'll probably need cash access now. So you can actually apply for an early refund. There's specific forms. You should absolutely immediately talk to your CPA if you think you might be eligible for this. As you can see, there's a tax differential rate from 35% and 21%. So that's one of the benefits. Recall, they lowered the corporate income tax to 21%. So what they're saying is you can carry back 5 years when the taxes were higher and you'll get a bigger benefit. So it's a huge cash infusion. Also, again, as Benjamin mentioned, it can also apply to individuals. So there's a significant benefit. The IRS extended a certain deadline for early refunds. I believe it might be for 2018. I forget at the top of my head, but you should absolutely, ask for the, or talk to your CPA and consider an early refund, because I think the deadline might be actually 7/15 based on the notice I recently, read or hit my email box. So if you haven't talked about this with your CPA, call them right after this presentation and make sure you don't miss any deadlines, at least for the early refund. So 11:31. John, how long do you want questions and answers for?
Since the last time when we did part one, we didn't really get the chance to make it through all the slides. So I think it'd probably be best if we made it through all the slides, and then we'll leave a little bit of time at the end for Q&As.
Okay. Let's go to the next tax benefit. You want to handle this, Benjamin, or you want me to discuss this one?
Yeah, go ahead.
So very quickly, there's a limitation on the interest expense. If you borrow and you pay interest, typically it's deductible. If you're not familiar with this concept, just think of a home mortgage loan. You get deductions for home mortgage loans. They have limitations to the extent, it's very easy to capitalize your company with equity and debt and play around with these. So they've put limitations historically in the tax code, and the 2018, the Trump tax reform. They've made certain other limitations. They actually dropped it to 30%. The thing we would want to note is, one, they've increased it to 50%, but I would like to just highlight that most of the small businesses aren't even subject to this 163J limitation. But if you're a larger business, you get increased interest deductions. You should just coordinate with your CPA and your internal, accountants to make sure you're utilizing any planning, et cetera, on this deduction. I think we can go to the next one. Yeah, we can skip this example, or we're going to run out of time. AMT credits. Benjamin, you want me to discuss this, or do you want to handle it?
No, go ahead.
So very generally, the Tax Reform Act under Trump, one of the good things they did is repeal the AMT, tax, but people had to carry forward from prior years. They said under the act you can utilize it over a period of time. The CARES Act actually just makes it eligible under a much shortened period. Again, this is highly complicated. You really need to talk to your CPA to see if you have an AMT credit carry forward and how you can utilize that earlier, and what refunds you can get, early refunds to help your cash flow business. Again, I think there might be a deadline at 7/15, so you should really talk to your CPA just to make sure if you need the early refund, whether or not you can quickly submit it. Next slide. Next slide. Individual tax provisions. So everyone knows there's the stimulus checks. There's special use of retirement funds. So you can take a early distribution. It's essentially a loan. You got to pay it back. There's increased charitable deductions, and there's certain other assistances. Next slide. Yeah, you can, let me just see if, we can skip this slide. It's just, everyone knows this, so I'm not gonna go over it. Yeah, we can go to the next one as well. So return extension deadlines, the only thing, Benjamin mentioned it, there was discussions of whether or not to provide an additional extension, not only for not to file taxes, but not to pay your estimated taxes. For whatever reason, the Treasury Department and the IRS decided not to do that, even though it seems like a good policy, particularly for this crisis. So you have to pay by 7/15. Contact your CPA and make sure you pay your properly estimated taxes, because there will be potential interest and penalties if you do not. Next slide.
Yeah, just a question on that. Can you make additional extension for the filing, right, of the final return? However, you cannot extend the obligation to pay the tax, right, or the estimated tax, but you can still benefit from some extension to finalize your return, right? So can you comment on that? Until what date can you extend the actual filing of the final tax return, and why it can be interested to do it here?
Yeah, for most taxpayers, you're going to have a 10/15 deadline, so it's a typical extension form for corporations, individuals, etc. As Benjamin mentioned, you can extend, you don't have to file your return, but you have to pay estimated taxes of your 2019 tax liability by a certain date. Otherwise, there are going to be potential additional penalties, which is essentially equivalent to the interest. It's more on the state and local side. They actually have really high interest rates typically. So you don't want to give, an 8 to 10% government loan, when you add in the penalties and interest when the interest rates are, zero. And if you put your money in a bank, they're gonna, sometimes they might give you with inflation, a negative rate. So you should just pay your estimated taxes. But yes, you get to 1015. As Benjamin mentioned earlier in the presentation, we would recommend that you, don't rush to the filing. Just pay what you have to pay if you have the funds, and then file your return by 1015. After taking account all these provisions to see how they benefit. The more time you have, the better. You don't want to amend your return because there's a potential higher chance of audit. Just amended returns in general, based on statistics, are subject to a higher audit rate. So you don't want to file, then have to amend. Why would you want to increase the headache of a potential audit? Next slide. So this is interesting. The CARES Act and other provisions, these affect the federal tax code, but there's always a state and local tax code. So one question is, will the states and the locality follow the federal government? And if not, if they decouple, how does this affect you? And does this make things so complicated that you don't want to deal with it? You have to check each state and, on a state-by-state basis. Some follow, some have general conformity, others have slight adjustments, etc., depending on what they like or not. We'll talk about New York next slide. I'll give you one example. So New York State and also New York City have decoupled from many of the provisions of the CARES Act. So generally they follow the federal government, but sometimes they decouple. In this particular, for the CARES Act, they have significantly decoupled, not only on the corporate side, but also on the individual side. So the NOL Carrybacks, for example, they have decoupled. Surprisingly, a lot of the personal income tax, they seem to have decoupled. That being said, so for example, if you get a retirement distribution, which you thought you can pay back over 3 years, that's for the federal, but query, will you have to pay state and local tax? And if you have to, then that really undercuts the, that essentially loan, because you're gonna have to keep 2 books and records for the rest of your life, because a part of it's taxable, but for the federal government it's not. So they really, I think, dropped the ball on this, because they did decouple even some of the personal side. We checked really quick before the presentation. So the PPP loan forgiveness, surprisingly as a technicality, that based on New York State guidance on their website, they would not tax that. So if you get a grant and it's essentially, that loan turns into a grant, New York State won't tax you. That's the good news. Also the stimulus payments. The question is, well, what is this? Is this a refund of federal tax, or is this something else? Is this some kind of benefit? They also said that would not be taxable, but a lot of the other provisions, they've decoupled. So the NOL carrybacks, your corporate income tax return, your personal, if you're on the personal side, it's going to be extremely complicated. You need to talk to your CPA, very quickly throughout the year. Also, if you're getting retirement funds, etc., talk to your CPA, get their opinion on whether or not that's taxable for New York State, even though, for example, it might be under the federal government deferred. Got to check state by state. Benjamin, you had a comment on this?
No, definitely that's important, and some people and some states are lucky and there is no or very little state and local tax, but the 2 big states are New York State, there is New York City, of course, and then there is California, where there are very high SALT considerations, so state and local tax consideration, and definitely it needs to be analyzed on a case-by-case basis, and definitely it can be very complicated because some states they decouple just in general any new federal tax provision, and some others may couple or decouple provision by provision. So it's kind of complicated.
Gentlemen, I just have a very quick question. You had mentioned to check for your state. Where exactly would our audience be able to go check for their individual state, say Connecticut or New Jersey?
So there's actually websites that try to track this. So your best bet is actually Google. You'll get a lot of information, and you can type in New York State decoupling CARES Act, for example, and you'll get a lot of articles from not only New York State but third parties. So that's the best bet to get quick information. But ideally, most people would have a CPA, so you should also contact them, assuming, be careful how they bill you, obviously, especially in these times, if and to the extent they're willing to assist you, without charging, at least to give you general information. But that would be my recommendation. You really need to talk to your CPA. But yes, check Google, check the websites. The Tax Foundation is another one. They do keep track of state and local taxes. But generally, just general Google searches should get you a significant amount of information. You'll be surprised how much information. Does that answer the question, John, or is there a follow-up question on that?
No, that answers the question. Thank you. There was
so I guess I guess also calling the the New York State tax department or like an agent, sometimes they would be able to answer on over the phone if you're lucky. So don't hesitate to try to call Connecticut, New Jersey, and speak with an agent that would be able to help. Definitely, we are happy to help you with any specific question if needed, or we can do research ourselves if needed for specific questions. We would be happy to help.
Yeah, so that's a really good point. Each state and the federal government, actually, there's a line where you can call and you can ask general questions. So there's just a question and answer line so you can definitely call them, and hopefully they'll pinpoint the right guidance. We just note that sometimes they'll give you if it's a position whereby it's not clear, they obviously represent New York State, so they might say it's taxable because they want to increase revenue. In terms of budgeting, all the states, all the localities have severe budget deficits. That's why they're decoupling. One of the things we're briefly mentioned, but we didn't put in the slides, if there's interest, maybe let John know. We can do another presentation. But a lot of people are leaving or working from home. That may trigger, depending on locality, potential. Are you operating a business, let's say in New Jersey? Because people are working from home or another country or whatever's going on, right? So there's a lot of teleworking, remote working that might trigger a nexus to other states and localities. Again, they're short on revenue, so they may be aggressive or they may not pass relief laws. The other is tax residency. So a lot of people left in New York City. They're on Long Island, they're in the suburbs. If this is something long term, that can save you a significant amount of taxes. Or maybe you switched from New York State and you went down and decided, I'm just gonna, because the teleworking works, I'm just gonna operate out of Florida, and there's no state and local tax. New York State is highly aggressive, so is New York City in their residency tax audits. And also applies to international, if and to the extent you have French businesses. But you can just imagine being stuck, let's say in a third party state, let's say the UK or whatever, for a long period of time. Unless they provide relief, they may say by working from home in that area, you may have triggered some kind of business nexus. So it's really complicated. It's really important if you're running a business to try to get around these rules. And also it can create huge tax savings if you move to the suburbs and you don't plan to come back. Again, there's just make sure you dot all the I's and cross all the T's, such that if you get a residency tax audit, you can defend it. Really complicated stuff, but again, we can do another presentation.
No, definitely, that's that's actually a very good point. And so one client mentioned to me the other day that her French employer was making sure that when they during the COVID-19 they are leaving New York to go and work from Paris, for example, they would not actually conduct any substantial work from France, maybe to prevent the qualification of so-called permanent establishment of the US company in France, and not trigger French tax on the business income of the US company. So definitely nowadays in this new world, where work is going to be conducted more and more remotely, tons of tax issues, cross-border tax issues can arise. That's a very good point.
Okay, next slide. So again, this is really for larger companies. They usually have an internal tax department, but there's potential relief with the provisions of the CARES Act, whereby some of the international tax provisions, such as GILTI, will be reduced. Also, some of you may have the 965 tax. There was some relief regarding the NOLs. I just comment, talk to your CPA. It's really, really highly complicated, but it can save you a lot of money, particularly into the international, or talk to your legal or tax advisor. I don't know if you have a CPA.
Yeah, so no, definitely, and very often actually local CPAs, may not understand the international tax components of your tax returns, and here again we would be happy to help.
Next slide, so briefly, and then we can go to questions and answers. So there's a debate on ongoing stimulus, as I'm sure everyone's aware. Unfortunately, the cases across the United States are increasing. So Florida, California, Texas, Arizona. There's more states than that, but those are the big ones always in the news. Again, it's not a red or blue state issue. California is a blue state. So unfortunately, this appears to be going to be a long time of this until there's a solution, or it goes away, or there's a vaccine. So there's discussions about additional relief. So the House passed a $3 trillion plan. Again, a large part of that money is just state and local funding, testing, some infrastructure to help the economy. There are tax provisions. One of the things they don't like is the NOL provision, because it does benefit also some real estate investors, etc. I'm sure you read it in the press. So they actually want to scale it back. But they, on the flip side, they want to give the state and local tax deduction back, which would reduce, taxes for high tax rate, which is actually what it was for a very, very long time until 2018. So they want to enhance the retention tax credit, employee retention tax credit. There's some child and dependent care tax credits, stimulus, more stimulus checks, etc. So that's the House plan. Again, it's dead on arrival, but it's a starting point for negotiations. So the Senate is working on a $1.5 trillion plan. It's not clear based on existing things in the press, etc. But they're floating around restaurant and travel tax benefits to stimulate the hotel and restaurant industry deductions, for those for businesses, and also even individuals under one proposal. My recollection is correct. Stimulus checks and unemployment benefits, they're trying to make it more narrowly tailored. The one big piece is any legislation they want to have liability protection. So if someone gets infected with the coronavirus when they come back to work, or a customer or something like that, they don't get sued. So that's going to be an interesting negotiation. We only mention it because the FACC and their members, I'm sure, can lobby. So if you're an affected business, maybe you want to contact John and see what you guys can do to get a lobbying group to try to lobby some provisions that might help your businesses. The last piece in the press is the election. So I didn't see anything specific on the Trump economic plan. I'm guessing it's the same as 2016. That's why there hasn't been, but Biden came out with an America type of America First kind of policy. So, he's got a Made in America plan for manufacturing tax credits, R&D, significant increase in expenditure to try to bring back jobs, et cetera, for the U.S. So just interesting. So, again, if you guys are interested in lobbying, or, forming a group or contacting your lobbying group, you should definitely get involved, because there's a lot of money involved, and it can help you in your business. Anything else, Benjamin?
Nothing else for now. Maybe some questions, John?
Yes. So thank you both, first of all, for speeding that up as much as possible. I know there was a ton of information to get through. We did go just a little bit over, but I would just like to kind of combine some of the questions I've been getting, and kind of just, do the both of you see a new provision happening within the next couple of months, or do you see little updates here and there? from where you stand from your perspectives?
So me personally, I mean, Benjamin can give his insight, but I think based on the rising number of cases, I forecast additional relief. My only concern is if it gets politicized because if the economy recovers too quick, obviously that might help the Republicans versus the Democrats. So there's going to be a push and take. I do expect a fourth plan. I think my gut is it's going to be around 1.3 to 1.5 additional unemployment, narrowly tailored, some stimulus money, and hopefully help at least for the restaurant and hotel and maybe airline industry. So that's my guess. But again, if you're interested, you should absolutely lobby. It's hard as an individual, but John, does FACC have a lobbying group? Maybe give you guys a plug.
Thanks for the plug, but I don't think we formed one exactly for this or anything like that. But you know,
you can think about it. It's really important. Numbers matter, right? Call your senator every day. I'm with FACC. We're a big group. We represent XYZ, and you know, give me a meeting, and this is how we can help. Right? You have to talk to people to get involved. It's an idea I'm throwing out, but I know it's additional work. But
well, if you want to lead it, Benjamin, would you be able to speak to that?
Yeah, no, I'm totally on board. So that's why it's important to not file a final tax return by July 15, because you never know what kind of good surprise you may have in the next bill.
I do just want to have a very quick question that just came in at the end, and I think it's actually quite applicable to most people who are here listening. If you're a foreign business owner with 98% share in the U.S. LLC firm, can I apply for payroll protection for my U.S. staff?
Yeah, there's no limitation just because you're foreign owned, to the best of my recollection and knowledge, for the PPP program, as long as you use it for municipal purposes. That being said, there is a limitation on the PPP amount of the PPP. So if you have to certify that the primary residence is in the U.S. Each employee. So if you're working out of France, etc., that's the only limitation. To the best of my recollection,
right.
Unless they changed it, because I didn't read all the revisions to the rules, but during the initial application and up at least to let's say June 5th, that was the only limitation. So, and it's just a head count. You'll have to reduce the amount of the PPP loan amount based on that criteria. But I'm not aware of any limitation. So that's what we're doing. If you haven't got your PPP, you should seriously consider contact your legal advisor. They want you to employ private people. It's really, that's the whole goal. It's not really whether you need it or not. They want you to maintain your head count, and I'm sure if things get worse, you may consider reducing your head count, and that's not what they want you to do. Benjamin, sorry to interrupt you.
No, I totally agree with that, and we have multiple clients who were in this situation with beneficial ownership based abroad, so out of the U.S., France, and other countries. So definitely they had U.S. business, so they were able to, with U.S. employees, they were able to get the PPP loan. Something very funny is, everything goes to banks, right? And so there are some forms to complete and, file online. And very often they are not, you need to disclose actually the beneficial owners of the US business. And usually the forms that they provide, they are not catered for foreign beneficial owners. So for example, they ask for social security, but the foreign beneficial owner may not have a social security number. So usually what we've recommended our client is to file, like instead of a social security number, to complete just the numbers like 11111111. And then, so at least to be able to, to complete the form, the online form, and to submit the online form. And then if there is any question, the bankers you're in contact with in the US, you just explain the situation. And actually these clients received, important sum of money within the PPP loan, so they are definitely entitled to it.
Well,
Yeah,
gentlemen,
if
oh,
you,
go ahead.
yeah, just one small comment.
Sure.
If you're worried about it, just, you can hire a lawyer, or, you work with your CPA. They will get you through the process, and you can negotiate with them. Like, once you get the funds, if you don't have the funds, you'll pay them with a portion of the fund. Again, because it's 60-40. So again, if you don't apply, it could be a huge grant. It could be millions of dollars. I gave you an example. Kanye West got $2 to $5 million. He does not need it. He could have funded it. Now, the question is, he would have laid off, right? That's his argument. I'm not going to put it out of pocket, but I'm just giving you an example. That's the reason we include them, not to single them out, is to get you more comfortable. If you're worried about these things, just contact your lawyer. He'll walk you through the process. Sorry, John. I know you want to wrap up.
No, it's okay. This is important, and I'm glad that both of you are taking the time to go over this. I just want to mention to the audience that the recording of this webinar and the slides will be available to you at any time after this. So, please refer to these, and they have contact information within the slides. So, feel free to reach out and they will direct you as they've graciously offered to. I just want to thank you both, Armin and Benjamin, for not only taking time to do today, but also doing it before in June, for going over these different aspects and different very complicated regulations. So thank you so much from everybody here at the FACC. If you would like to lead a lobby group, we could talk about it, Armin. But beyond that, I would like to thank the attendees for being here with us, and looking forward to seeing you at our next webinar. Thank you so much again, Armin and Benjamin, and I know we will chat again soon.
Fantastic. Thank you, John.
Thank you,
everybody.
Have a good one.
Have a great rest of your day and a great weekend. Take care.